Good morning, everybody. My name is Dustin Winston, and I'm excited to be here today to give the Idaho dairy portion of the Idaho Ag Outlook. I know says James will be presenting this. Traveling took him away from being able to do this presentation, but I hope that you'll find this presentation from me just as informative and really honestly, I think we have a great outlook here for what Idaho dairy should be expecting in the time to come. Here we have, of course, the disclaimers. As I'm sure you all are used to seeing in these industry presentations. During this time, I'll take the time that I have to put it up to introduce myself a little bit. My name is Dustin Winston, as I mentioned. I'm a proud Idahoan and have enjoyed being with StoneX for the last few years. I am a Vandal graduate or Vandal alumni myself, so I'm excited to really be back and contributing to this Idaho Ag Outlook that they've put together. I want to start by giving a quick overview of the global perspective of the dairy industry. I think Idaho not only plays a key role due to its contribution to the U.S. dairy industry, but the global perspective really plays a significant part in the prices that our farmers are expected to receive. So I'll run through this pretty quick. The big takeaway here right at the beginning is the U.S. is receiving a competitive advantage in terms of what it costs us to produce different dairy products on average. And as far as an export point of view, this is really beneficial because it means that we could potentially gain some market share in uh, different importing countries that may not necessarily import normally from the U.S., but due to our significant price advantage, especially as prices increase, we can see a lot of gain in value there. So I think there's a lot to be taken away from the competitive advantage that we currently hold. A big part of that reason is because global supply is contracting. Milk from the largest five producers, and just a reminder, those are the EU, US, New Zealand, Australia, and Argentina. Those are our big five. Just about everywhere, we're seeing milk supply contracting. Here we'll target the ones that aren't the US, and we can see the EU is seeing through the data that we have through October, September, October, we're seeing a beginning of contraction here. Part of that is due to high feed costs. In the US, we've seen that ourselves with having some high feed costs, but we've been fortunate that those have backed off a little bit. And the EU, that's not been the case. And then you tack on their weather that they've been having on top of that, and it's not a pretty picture for what normally we see from most of these major global producers being consistent year-over-year growth. We will likely see through the end of this 2021 year and into the beginning through Q1 of 2022 a significant pullback in the milk production from the EU. In New Zealand, I know our forecasts are showing growth, but we've really taken a look at this recently. Their season, of course, being the southern hemisphere, is from July of 2021 to June of 2022 for Australia and New Zealand. And both of these countries, we don't have an Australian graph up here, but New Zealand and Australia have both started the year off very poor in terms of milk production. New Zealand, in particular, has been suffering from pretty poor weather as well as a change up in their calving structure. So that's been a significant impact. I think we'll see these forecasts through the next 6 months really come down, and we'll likely see, at best case, milk production being flat over the season with year ago levels in New Zealand. Production in Argentina is really the one kind of black sheep at the moment, with their production being pretty strong. But the one thing that we need to keep in mind here is not only are they the smallest of the five major producers in the world, but their exports have also been severely impacted, primarily due to logistics issues. They're really just not able to get their milk out of South America, which continues to open up doors, and they're unable to fill that little bit of extra import demand space that may be there, potentially that could go to the US and maybe the EU right now are the two logical choices. When we look at this from a demand perspective globally, we're seeing a couple of factors due to that contraction of global supply. One being there's less volume to import overall, and second, as we know, and if we think back to our Econ 101 days, as supply becomes limited, there becomes a bidding war for the price that is having to have paid for that supply that is there. So we'll likely see prices come up over the next probably 6 months into 2022. So we're talking a 9-month period or so. If we think of where our data is in October, September timeframe to that time, being that we're in December now, we'll probably see prices continue to be strong through June. Um, so that's a factor. And then, of course, like I mentioned, that limited supply. So we'll likely see import volumes dip a little bit here, which is weird to say that demand is strong, but demand is in fact pretty strong. And I would say the fact that there's even forecasts for any year-over-year positive growth is something to be happy about, is a bullish sign in the market. If we move into our US perspective here, we've got a couple of big factors. One is farm level costs. I think we would be remiss not to mention this right off the top. From our numbers here at StoneX that we've seen for a farm between 500 to 1,000 cows, we're seeing an increase in costs of about $3.30 per hundredweight. Now, a large factor of that is feed, and we know that feed costs have been extremely high. I'm sure that's been touched on in the grains portion of this Idaho Ag Outlook. But we're seeing labor and other input costs as well be significant impact to the balance sheet of the U.S. producer, and this hasn't been lost in Idaho too. We've also seen that impact here. So something to keep in mind that. Lately we've been saying $18 milk isn't what it used to be. I think this puts it in the clearest perspective possible that milk production, the cost of milk production is rising and will likely rise again next year. So these higher costs are might not be as favorable as they used to be 5-10 years ago. Excuse me, the higher price of milk that's being sold might not be as favorable as 5 or 10 years ago, but it's definitely going to help alleviate some of that margin pressure, I think. Here we can see another uh, visual form of that cost of production there and the revenue that we're estimating they're receiving based on that average farm size. Again, 500 to 1,000 cows. Most farms in Idaho our average is above that, of course, but if we look at the U.S. perspective, this is what we're seeing. Most of the time here at StoneX, we look at gross margin, so revenue from milk minus feed costs. But if we look at net margin, that's showing a really rough picture at the moment. In the U.S., of course, net margin is your total revenue minus total costs. So uh, that's a little bit clearer picture from a business perspective, but sometimes those aren't as easy to gauge. So that's why we look at gross revenue or gross margin more frequently. However, we're still even at our forecast levels where we're expecting them to go in 2022. We're probably lucky to be seeing margin values hit above that 25th percentile. Now that's historical time frame over this period, the last 10 years, right? That's the low 25% of prices is underneath that line. 75th percentile, everything historically greater than 75% of prices we've seen are going to be above that. So not the greatest outlook, but right now we're seeing a lot of bullish factors that could potentially alleviate this, especially if our forecasts for other input costs aren't don't come to fruition, and those might be a little bit cheaper. We could see that number come up, but gross margin is looking fairly favorable, and hopefully we'll continue to see feed costs be something that's affordable for the Idaho dairy farmer. if we are talking about herd size, the herd size has been in contraction for a couple of months since our peak in May, and I think we'll be seeing that for some time here. Of course, often we see the dairy herd work in a very seasonal pattern, and we are in that normal seasonal decline at this point of where we'll normally see contraction. One thing also to note here is that coal cattle prices, prices in the cattle market are a lot higher than the historical average currently. So there's some favorable value to be considered for a dairy farmer here between what would be taking costs off the market from that feed cost that they're having to pay out at such a high value for a cow that might not be producing as high of a yield right now, and getting the beneficial cash value from the beef market in those cows. So we're looking like we'll probably be between 0.5 and 1.1% down on herd numbers come the midway through 2022 here. If we look at U.S. production, of course, this is a big factor. And I know that I've been talking a lot about Idaho farmers here, but this plays in, both this and the last slide plays into what processors should expect to receive is milk volume being down. So with a contracting herd, that's going to mean less total volume coming out. Yields will likely stay pretty consistent. Uh, we don't see any reason that those should be coming down. But with the contraction in the herd, that means that we're likely going to see a reduced production here, which means less milk available to manufacturers. Right now, that might be something that could be seen as favorable. I know recently we were dealing with a backlog in milk, and some folks not able to be sure if they were going to be able to take everything on. We know some capacity is coming on nationwide here, but that'll be a few years off. However, I don't see any way to take this other than bullish, even if capacity was running full bore right now and we had room for more milk. This is bullish for price. So we're talking bullish for the producer of milk and bullish for the producer of the processed products that's going to be selling those to an end user. We're going to see cheese prices likely come up as a result. And we'll talk about that in a little bit more. Moving into the Idaho perspective here, and this is really what we want to target, right? This is the Idaho dairy outlook for the Idaho ag uh, season. So cash milk prices have been favorable, but again, going back to what I mentioned earlier, $18 milk, $19 milk is not what it used to be. I'm glad that farmers should hopefully be receiving prices around here, and that's why we're in business, is being able to do risk management around if uh, prices aren't necessarily what farmers want to be receiving. We can help protect that some, but uh, feed costs are still really high. So we'll show that on the next slide. But basis has been strong, which is fortunate to see. We don't expect any reason why prices, especially for the first half of 2022, shouldn't stay near these levels at least. They should be pretty strong, and I think we're pretty solid in that expectation. So that's something, as much as we don't want to, we say this is our estimate and we don't want to guarantee it. I think it's a pretty strong estimate. Idaho feed costs, like I mentioned, have been very strong though, and uh, this impacts our margin 100%, and that carries through the supply chain. I think everybody in the supply chain should be paying attention to what prices are producers of milk receiving, both input level and output level, because those costs, as much as they haven't carried through necessarily in the past, I think we'll start to see some more carryover there. So these feed costs, we've seen a pullback a little bit, but we probably won't see them go down to levels that we had before the first half of 2020 there, where we just weren't used to seeing corn prices over 450 a bushel, and wheat prices skyrocketed this year too. So I mean, crops in general have just been high, and I think we'll probably expect that, especially given global markets, we'll probably expect those feed costs to stay pretty strong through the next half of the 2022 year. Excuse me. So here, of course, we have the gross margin graph for Idaho producers in particular that we've been looking at StoneX. Prices have recovered. They'll probably stay below that 75th percentile through at least the majority of 2022, if not the entire year. Of course, this is gross margin, so we're just looking at milk revenue over feed costs here. But something to take into consideration is we're no longer below that 25th percentile line that we hit the first half of 2021. Our market's recovered a little bit since then, which is good. And I think a favorable outlook here. There's a lot of opportunity that we're seeing right now in the market. A lot of opportunity given prices where they are in the milk market, and a lot of opportunity to manage risk and take advantage of different prices both in the input and output side. In Idaho, of course, a large portion of our manufacturing is cheese. So we would be remiss if we didn't have a slide to talk about this. U.S. cheese prices are providing a competitive advantage in the global market, and I think that carries through to what we see in the U.S. and Idaho in particular. We're seeing a lot of opportunity. Now, prices may not be as high as uh, other countries, but that means that our sales opportunities are open. So we have a larger chance to have a more stable price is the big takeaway here. A larger chance to have a more stable price. As you can see, we're projecting a decline in the Oceania and EU cheese prices to come pretty frequently. I think overall, the Class 3 market, in particular cheese, is looking like one of the weaker markets as far as price opportunity to the upside that we're seeing in the dairy complex. Here's a big reason for that. Cheese production and whey have stayed pretty consistent over the year at about a 2 to 3% growth each quarter over last year's levels. Whereas in butter and non-fat production, we've seen a decline in this last quarter pretty significantly. And that is a large portion of why we've seen in the market recently a flip in the Class 3, Class 4 spread, and we've seen Class 4 overtake Class 3 prices. There's a lot less supply in the market in butter and non-fat. Excuse me. And demand is staying very strong. We've seen Mexico continue to buy up a lot of powder. And until today, actually, I'm presenting this on December 7th. We got the U.S. export numbers today, and while we expected those be strong, they slid a little bit. So really, through 2021 until October, we've seen really strong Class 4 demand and steady Class 3 demand and cheese and whey. But with Class 4 demand being what it is and production sliding like this in the U.S., and as much as we've been exporting, I think there's nothing but room to the upside for Class 4 prices in particular right now. We don't expect cheese prices to change much either, or cheese production, excuse me. We don't expect cheese production to change much either. And given that forecast, I don't think there's much expectation for cheese prices or the carry through, of course, to Class 3 price to change much either. So I think we'll see a lot more of the upside opportunity in Class 4 with a little bit more steadiness in the Class 3 market. I think we'll see those levels. We're seeing demand stay fairly flat. We're seeing production stay fairly flat. Of course, year over year volume is up. But if you look at that total production value, you could almost draw a straight line across the average month-to-month forecast there. I think what we're seeing in our Class 3 market in particular, and cheese being a big factor of that, is a fairly even expectation for where production, where demand is going to be, and facilities are just going to keep running at these levels, I think. That's all I have. I know that was quick, but there's not a ton that you can fit in a 20-minute presentation, so I wanted to just keep it brief and keep an overview to what you folks in particular might be needing. But as always, StoneX is here to help, and we love to speak with folks every day about what we're seeing in the markets. That's what we do. Please feel free to contact me at any time. And hopefully at this point, we're live for questions, and there's plenty of those on the market, whether they're about the presentation or not. So again, thank you so much for your time, and go Vandals.